Now, in terms of this cut, should the RBA have perhaps waited until the Fed moved later this month?
Yeah, that's a good question. I think, given what we know, I think the Fed signalled that they were going to cut rates. I think the RBA is anticipating the Fed will cut rates. And I think we're seeing, slowly like a coordinated response from central banks around the world. So the RBA meeting came up. I guess they were convinced they were going to cut rates. A month ago, they were still up in the air about whether they would need to. So once they are convinced, there's no reason to wait, go for it, and they moved. As you mentioned, the market was fully priced for a quarter-point move. Not all economists thought they were going to cut today. I did think they were going to move, but the markets are actually pricing in a little bit of a chance of a 50. And I think why the Aussie bounce was because the market, there was some price that they might go by 50, but I don't think they were going to go that far because that risks scaring the horses. So 25 today and maybe 25 in a few months' time, the best way to go.
Realistically, though, in terms of addressing the impact that the coronavirus is likely to have on the economy, is it even necessarily that the RBA cutting today is going to have that much of an impact? Isn't it more to do with the fiscal response that we might see tomorrow?
I think that's going to be important. I think we're at a situation where we need to do something to sort of bolster confidence or support confidence, even if it's the share market. I think, as we saw last week, there was a risk that if central banks don't step in, at least talking about offering support, the markets could just feed on themselves. You just get this negative spiral in the equity market because we all know the news on the economic front is going to be pretty bad, at least for the next few weeks, if not months. And so the Fed and the RBA are just putting grain in the machine, the sand in the machine to sort of at least give people who want to short the market and slam the market something to think about. So if anything, it may not stop the market declines, but it may sort of slow the market declines.
Hi, David. It's Matt here in Singapore. Is this the start of more coordinated central bank action from right around the world? You were just talking about the Fed, but are we going to see other moves from the likes of the ECB and BOJ as well? And how aggressive do you think any monetary policy changes from these central banks will be?
Yeah, look, I think we will. Obviously the problem around the world is that many central banks already have interest rates at like zero, and I think the evidence from Japan and Europe is that negative interest rates aren't that helpful. What they probably will announce is some, renewed quantitative easing, buying up debt. Whether that, again, I think the game we're playing at the moment is not so much that lower rates can directly help stimulate spending, but it's the indirect psychological impact on if markets and investors and consumers think that the central banks are aware of the risks and are trying their best to sort of support the economy, that's better than nothing. So it's really a psychology game at the moment rather than, I think, further moves necessarily directly contributing to growth, because it is getting pretty tenuous that they can actually offer much support at the moment. But just to answer your question, yes, I think we will see, maybe not coordinated in that they all do it at once overnight, because obviously the RBA went today. Maybe the Fed, some talk the Fed could go as early as tonight, but possibly they may still wait for their meeting to move, and probably by 50. And I think central banks around the world may go at their next appointed policy meeting rather than, all at once overnight.